when I have people that are giving me their money, they're giving me their hard-earned money.
Exactly.
And they're putting it right up. Many times they're putting it alongside my money. So I have my skin is in the game, and I don't have skin in the game to 50 grand or 25 grand. I've got several million in this.
Yeah.
So my money's right there, and I have, for me, what is some serious money to lose.
Yeah.
So I am definitely going to cross every T and dot every I. Now, is it guaranteed that I won't make a mistake? No, I'm human. It is what it is. I've got one loan in Florida right now that's getting a little sticky, and we're having to work our way through it. And the other side is not being as forthcoming as they need to be. So we're getting, a little more assertive in our demands.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Mike, welcome to the show. How are you feeling today?
I'm feeling great, Peter. How are you today?
I'm doing very well, very well. So I'm happy to be talking to you. Happy that you're here. Let's start with an introduction. So, Mike, who are you? What do you do? What's your story?
Oh boy, that's a lot to unpack because I'm an amazing guy. So my name's Mike Seidl. I'm a private money lender, and I actually do use private money as opposed to hard money. And the hard money guys that call themselves private money, and they're not. So I am using 100% of personal capital and that of some friends, family, and a couple of other people have asked us to deploy some capital for them. Just in a very quick 50,000 foot view, this is my third company. My first one was way long ago when dinosaurs roamed the earth, and it was medical alert systems. I was on the front end of that, the push a button, get an ambulance. I started that with a partner back in 1987 when I was 23 and my partner was 20. After 10 years, we sold it to a public company that came forward and was acquiring monitoring accounts, because when it comes down to it, a central station monitoring, it doesn't matter what they're monitoring. They're answering a call and sending some type of emergency help. So they were very interested in purchasing us because we had several thousand customers in 15 states.
Wow.
And they were also interested because we were paid by different states would cover the cost.
Wow.
So all you had to do is get someone who was interested. They had to prove their need through their doctor, and then the state would pay for it because they wanted to keep them out of nursing homes. So it saved the state a lot of money.
Yes, that's amazing.
And then my second company was a construction company where we focused on property damage. So if somebody had fire, water, vehicle impact, and we did in the neighborhood of 250 to 300 repairs a year.
Wow. That's amazing.
And I sold that in 2017 and started private lending on handshakes to some people I know who are in the restoration industry. They had a very interesting model, which I wish I had thought of it when I was still in the industry. Although I have no desire to ever get back in that industry. If I had thought of it, what they would do is if they went to a house where there was a fire and it was going to be a full gut to the studs, they would buy the house off the person. So the person would get their insurance money. Then they would get the money from this guy here. Everybody made out well financially.
Wow.
And they'd buy the properties and they would repair them. So in that instance, I was lending money to some people I knew in the industry. And then in 2019, I heard somebody speak about Wall Street. He was somebody who had $1.4 billion under management for one of the major Wall Street firms. He explained how things work and don't work behind the scenes for retail investors such as myself, and I assume you as well, and most of us. And that made me really start thinking about all the money I had on Wall Street. And then about 9 months of research, trying to poke holes in everything that he said, and I couldn't poke holes in it. I'll never forget, I was in Phoenix at the time. I was sitting in my office and I said, okay, that's it. And I called my better half and I said, Lois, I'm done with the stock market. She said, okay, go for it. And I literally sold millions of dollars of stock it's amazing how fast that can happen. It really can.
Just a couple clicks right into the mouse.
And it's dangerous. Yeah, nobody calls to verify or anything. They just sold it all. And suddenly I had all this cash in my account. Wow. And then I went all in on private lending.
Wow. Well,
so that's it from a 50,000 foot view.
That was a really good intro. I think you might take the award for best introduction, and you've given me a lot of ammo. I always start Oh, if people don't know this part of the show, but we always start by saying, start with the intro. That'll give me a lot of ammo for questions. And that really did. So one thing that first came to mind, with what you were saying was a hard money versus a private money. And sometimes the lines being crossed there where people use the words maybe not necessarily correctly. So please set the record straight for us. What is hard money versus what you do with private money lending?
Okay. Hard money. Very few people that you're borrowing hard money from are actually the people you're borrowing the money from. They're white labeling.
Yeah.
Relatively speaking, there are very few actual hard money lenders who are getting their money directly from Wall Street. So you have companies like was Lending Home, now it's Kiavi. They're getting their money directly from Wall Street. They're selling their paper. But then you have companies such as RCN that will white label for people who fit their criteria. And what's happening is those people, for all intents and purposes, are loan originators, and that's it.
Yeah.
They go by the guidelines that Wall Street gives them, and if they don't fit those guidelines, you're not in their buy box, they move on.
Yeah.
For me, because I'm using my own capital, personal capital, and that of friends, family, and the community that I've created, when you call, you're calling, you're speaking with me or my partner. That's it. We're going to make the call. So if you can convince us that it makes sense, then we're willing to take a look at it. As long as it's backed by real estate and the numbers work and we have a good operator, then we can lend on it. So when we first started, we were just doing single family homes. And then I met somebody who was big into mobile homes in Florida.
Yeah.
I grew up in Massachusetts. A mobile home didn't sell for more than 15, 20, maybe 30 grand. They're garbage.
Yeah.
And then when he told me that he was selling them for 2.25, 300,000, I thought he was lying to me.
Yeah, exactly.
You knew that they sold for that.
Yeah.
So once he explained it to me and I got a comfort level with him and I did a background check on him, they said, no, he's serious. They really sell for that down here. So I did all my research. I started lending to him. And then I've had people come forward in multifamily. For example, I've gotten some people that need what I would term rescue loans. Everybody knows 24 was a challenge. 25 is going to be a challenge potentially. And they needed some capital in order to get over a hump. And because I had existing relationships with these people, we were able to lend them money to get them over the hump. And then we've got another person who came forward, and what he was doing is small multifamilies. It didn't really make sense for him to raise through a syndication, but at the same token, he didn't have the money that he needed in order to close and do the repositioning of the property. So he came to us, and we were able to lend him the money, he and his partner, the money, so that they didn't have to do a raise, which for them was fantastic because now they still own 100% of the property.
Nice.
They didn't have to get away 70 or 80%. Now it's a smaller property. I think we've done it with them 3 times now.
Wow.
And each of the properties is, I think, below 50 units, 50 doors.
Cool.
But that seems to be their sweet spot. And they live up in the Northeast, and so that's a product that we have as well.
Yeah.
And I've had somebody come forward. He needed money for his business. He's a real estate guy, but he also has started selling lumber because he uses a lot of the way he does his rehabs. So he started selling lumber. He was in a cash crunch at the end of the year. So he came to me for a short-term loan, a couple of months, but we cross-collateralized it with real estate.
Wow.
So my point is that with private money, I can be flexible. I'm the guy that you call.
Yeah.
There is no supervisor above me. There's no manager. There's nobody on Wall Street. I simply have my investors. They understand what the buy box is, and we're fine. We've been doing this. I've been taking money from investors since 21.
Okay.
When I first started putting a lot of my money in, again, I started in 17. When I started putting a lot more money in 19, I wanted to get my systems down. And a friend came forward in 21 and asked me, we were in Oklahoma looking at a medical marijuana grow. And he was asking me why I didn't take him up on his opportunity to put some of his money on the street. I was like, dude, I totally forgot this conversation. He said, well, yeah, I've got some money I'd like to put on the street. So I asked him how much. He said, well, we'll start with $1 million. And if we like the returns, we'll go up from there. And he liked the returns because we've gone up from there. And so It started out with me practicing with my money, got other people in 2021, and we've been going since then. But again, we don't have a lot of people to talk to. It's Zach and I, and that's it. If we like it, we go. If we don't like it, we don't go.
Yeah.
But it's got to be numbers and good people.
Yeah. That's awesome. Well, how has the business evolved over the years? I mean, so like you said, and that side, it was just kind of, it's been the two of you and using personal money to now, bringing some friends and family on and investors, that kind of thing. But how has your kind of bringing different people in to potentially lend to, do you do marketing on that side? And then like, how is your due diligence? Has it evolved? Do you feel like it's gotten better and more refined, or, you still do the same thing you did back in those days and it's just working for you, or what's that look like?
When you say due diligence, do you mean due diligence on
The whole thing, the borrower and then the deal itself, because both are equally as important, right?
Okay. So when it comes to the borrower, sure, the due diligence has gotten better over the time because you've always got somebody who's going to try and pull off a gotcha. So what you do is you try and be prepared in advance. And one of the ways that we do that is I have a fair amount of people in my network who are in real estate. I go to a lot of masterminds. And when I sold my construction company, I was going to flip houses.
Okay.
I thought if we're doing, because understand, when you own a restoration company, you're doing 30 custom houses or 25, 30 custom houses a month. Well, if you're doing flips, it's an assembly line. Nobody's in there.
Yeah.
So I thought for sure I could do 10, 15 a month with one project manager and handle it that way.
Yeah.
So our systems have gotten better in that we're able to dig down a little bit further because I know so many people in the industry. And if somebody calls me from a specific market, I generally can put a feeler out in that market to see if anybody knows them. And I'm able to find out pretty quickly. And the people that I'm setting the feeler to, they're generally people I know well. And they're going to tell me straight up, no, you don't want to lend to this guy, this gal, or yeah, they're good, they're solid.
Yeah.
And that's what I'm looking for. So yeah, our systems have gotten better. And the way that we do it, we're using both a combination of richer value and prop stream, and we'll look at Redfin as well. And we're using all three to come up with a number that we like for the property. So yeah, we've gotten better at that by refining. When I first started out, I was doing it a lot on just using Redfin and that's it. And now I use the others to verify my numbers.
Gotcha. How do you verify the project, to make sure they're not underestimating what the costs are going to be from a renovation standpoint?
Well, the advantage that I have is I own the construction company.
Yeah, I would think that definitely comes in handy, right?
Yeah. So when they're sending me over their scope of work, I'm looking at the scope of work. And if they're telling me that they have a house that's going to sell for $200,000 and they want to do a $90,000 kitchen, I tell them they're nuts. So I'm able to look at the numbers and get a feel for, okay, this many square feet. Okay, that's about what it should cost for drywall. And it's not exact because each market is different. But I get a good feel for looking at the photos, what's going on. We also did mold remediation and other types of cleanup. So I can look at a photo and say, yeah, you have mold there. How are you going to handle that? And when they take the photos for us, we have them put an app on their phone. So it's geo-tracked and we know where they're standing.
Yeah. That's one of the things I think that comes in handy, because I think a lot of people maybe think the hard asset side is going to be difficult because they don't own a construction company, or they don't know how that operates with maybe working with a GC and subcontractors, things like that. So they think, oh, I'm just going to lend, I'll lend money. But in order to be successful at it, you got to have to know those things, right? It's just like, is that scope of work realistic? Is it not? Or the comps, the ARV that they're telling you, is it realistic or not? So there's all these other things that go into it. And that's where I think working with somebody like yourself probably comes in pretty handy, because you've been there, done that. You've been on opposite, different sides of the business and all to understand and kind of take that due diligence to a level that it needs to be in order to be successful.
Well, I think because of my experience in construction, I can pick up idiosyncrasies that someone without experience couldn't pick up. For example, I had somebody up in Michigan who was referred to me, and I did a loan with them, one loan, and there won't be any more. And what he did was he sent me photos of the tile job in the bathroom. And he wanted reimbursement because I pay after the work has been complete. Send me detailed photos. And I looked at it and I said, you have no trim on the tile. I'm not going to pay you till the trip is done. And he said, no, that's the way they do it up here. No, that's not the way they do it there. No, I've been in this for years. This is where, okay, this is the way we do it. I said, okay, get your contractor on the phone. Let's have a three-way conversation. I'm going to have him tell me. And then I'm going to call somebody in the house. I'm going to call somebody in your town, such as a Home Depot or a supply house. I'm going to have them get me in touch with a local tile guy and have him verify what you're saying to me.
Yeah.
But I am telling you that there's no way that that tile is done.
Wow.
And then he called me back about a half hour later, and his excuse was his project manager told him it was done. So I'm able to look at I'm able to look at the photos and know what's going on in the photo.
Yeah.
So yeah, that's an advantage that we have. My partner and I, he's a tech guy. I'm the operations guy from having been there, done that on the construction side. So the advantage that we have is I've been there and I've done that.
I love it. That's a good story. I'm sure that guy, oh man, that's good thing you only did one, right? My goodness, that's scary. So let's talk about that. You mentioned like only paying after, the work was done, that kind of thing. So talk to me about how you structure the loans, how you do draws and things like that. Is there a percentage of ARV that you'll lend on, that kind of thing, or a percentage of cost plus, the acquisition and that kind of thing. So let's talk about how your typical loans are structured, and if it varies, let's talk about that too.
Okay. What I can tell you is we're generally lending 80% of purchase and 100% of repairs.
Okay.
A maximum of 70% all in combined.
Okay.
So
Nice.
on a $200,000 ARV, the most we will lend is 140,000 combined between purchase and repairs, because we want to make sure there's that 30% buffer in there.
Yeah.
And so that's the way we do it from that side. And we do have some special things that we can do with people if they have another property that has leverage left in it. We can lend 100% of purchase and repairs. So instead of coming to the table with 20%, they have to have another property that we can cross collateralize that has 20% of leverage. But the idiosyncrasy on this is that property cannot have more than 70% combined leverage. So let's say they already have 50% leverage on it. We can take 20%. So let's say in a $100,000 home, for simple math, if they have 50,000 of leverage, we can lend them 20,000. Meaning, or we can use 20,000 as equity for their down payment, so they don't have to come up with the 20%.
Gotcha.
I have a couple of people, what they do is they have us leave mortgages on a couple of their properties. And as they turn them, that property already has a mortgage on it. They know they've already got 20% coming from that property.
Nice.
As far as draws go, draws require detailed photos, especially if they're doing tile jobs. Trim. No, so we need detailed photos of the whole room, and we need all walls, floors, ceilings, whatever is involved in the repair. And then we simply take a look at the photos. Again, they're geo-tracked, and I know construction. So I know if they're standing in the house that they're saying. And what we will also do is we will look at the before photos, because we always get the before, and then we will look at the after on two screens side by side. And say, okay, well, that can't be this house because there was video that
Sure.
it wasn't turned on.
Yeah.
So we're able to check that way. So yeah, draws. So we look at the photos. We guarantee that we can release funds in 48 business hours.
Nice.
But there are times where I'm available, it comes in, and I've released the money within a half hour, 40 minutes. I mean, it's not rocket science. You're going to put
checks out, right?
down, and you're going to put carpet down. The carpet's down. I give you your money.
Yeah.
I think one of the advantages that I have is because I've built and sold 2 companies, and now I'm on my 3rd, and I started as a small business person, and I still am. I understand the need for cash flow. I understand the money.
Yeah.
So I'm not somebody who just pushes paper and has a boss to answer to. I'm somebody that feels your pain, that Friday's here and you need to pay your people.
Yeah.
So I understand the need for cash flow. We guarantee 48 hours, but if we can, we'll get it out quicker. It serves me no purpose for a couple of reasons. One, I don't make any interest on it because I have it sitting in an escrow account. Secondly, if it's in my account and somehow my account gets hacked, now I'm responsible for it. So I
Sure.
want you to get that money as quick as possible so it gets it off my back.
Yeah. Yeah.
So that's how it works on the escrow side and what we do as far as percentage down. But again, we can be flexible if they have other properties.
Mm-hmm. And what is the like term? What does that look like? How long, interest rates? Any you do any kind of reserve for interest or something like that? Or I doubt you do, but curious to what that part of it looks like. Origination fees and all that.
Yep. So what I can tell you is that it's just interest only
Wow.
until it's complete or until the end of the term. Single families, we're generally looking at 9 months. We understand that people are running into some issues now, so we can be flexible as long as we're kept up to date.
Mm.
And it's all going to be on a case by case basis. If I've got somebody because what we'll do is when it comes to their interest payment, we do an ACH debit from their account on the first of the month.
Mm.
So as you can imagine, today's a good day for me.
Mm.
So
Yeah.
what we do is we do an ACH withdrawal from their account on the first of the month. And if their payments are coming across on the first of the month and nothing is bounced back and they're making progress on the repairs, and we track progress on the repairs to make sure that stuff is being done. And the way we know is we're financing repairs. If you're not coming to me for money, then there's something wrong.
Mm. Yeah.
So I'm sorry. So the process is, so we know the repairs are being done, ARV. Okay. So I lost my train of thought there. Forgive me.
Oh, it happens
So-
all the time to me.
Yeah. So we'll go longer than 9 months if there's reason for it. And we've been kept in the loop. You can't not pay me on the 1st and on the 15th, you finally respond to me and say, oh, I need an extension. Well, by then, no, you've lost your goodwill.
Mhm.
We need to be a little more assertive. Now, I don't pull all the levers at once because that leaves me no dry powder,
Mm.
but I get a little bit more involved if they don't, if I'm not kept up to date.
Sure.
So on the multifamily, we've gone as far as I think we did 24 months for one guy.
Wow.
Because we talked about the stabilization and everything that was going on. So we were able to agree on 24 months. And what they did was they cross collateralized it with another property to give us a comfortable feeling.
Nice.
So I guess that's it in general terms, but we're generally at 12% and 3 points for a single family.
Okay.
The multifamily is going to be on a case by case basis.
Sure.
We've charged 1% per month. We've charged 2% per month.
Mm.
We're going to take a look at it. We're going to see what our liability is, what their experience is. But while 24% a year is expensive, and we don't deny that at all, they own 100% of the property when they're done.
Yeah.
So
That's
they're
huge.
going to net out more than they ever would
Mm.
if they went to a syndication.
Yeah.
And for the people who understand not simple numbers, they jump all over it. They're happy to do that.
Sure. Yeah, that's great. Interesting. So, what about collateral instrument? Is it you're doing a note and a mortgage, or what does that look like?
Oh yeah. We do a note, we'll do a mortgage. If we cross collateralize it, we'll do a mortgage on the second property
yeah.
as well.
Yeah.
If we are going, so there's those, then we do a personal guarantee. We will do they'll have to sign an affidavit that they understand that this is a business purpose loan, because there have been occasion where somebody will move into a single family and say they thought it was a personal loan.
Mm.
So those general documents, they have to sign the document stating, they know when the first payment is due, even though that should be self-explanatory from the note. We
Mhm.
spell it out for them black and white. We're getting title insurance, and our attorney writes documents on every single loan,
Mhm.
and they will read over the title and make sure that title policy is going to cover us, and quite frankly, cover the borrower, because there's times where we found stuff where the borrower wasn't as covered as they thought they were. We will get proof of property insurance and general liability. And on GL, we're generally looking at 1 million, 2 million for liability purposes.
Mm.
And we will get named as the mortgagee, so that our name goes on the check as well in order to cover our six.
Nice. Wow, that's awesome. Yeah, not everybody does it the same way. So that's why I ask what to do in the mortgage thing. I'm surprised sometimes with people on the show where they're private lenders and they don't do certain things, and you just think, Jesus. But Hey, that's the definition of a private lender, right? You could do whatever you want, but you seem to be doing it the right way, without a doubt. Yeah,
Yeah, well, what it is when I have people when I have people that are giving me their money, they're giving me their hard-earned money,
exactly.
and they're
Yeah.
putting it right on. They're many times they're putting it alongside my money.
Hmm.
So I have my skin is in the game, and I don't have skin in the game to 50 million, 50. I'm sorry, 50 grand or 25 grand. I've got several million in
Yeah.
this.
Yeah.
So my money's right there, and I have for me what is some serious money to lose.
Yeah.
So I am definitely going to cross every T and dot every I. Now, is it guaranteed that I won't make a mistake? No, I'm human. It
Mm.
is what it is. I've got one loan in Florida right now that's getting a little sticky, and we're having to work our way through it. And the other side is not being as forthcoming as they need to be.
Mm.
So we're getting, a little more assertive in our demands. But for the most part, everything goes fine. I haven't foreclosed on a property yet in 7 years.
Ah, okay. That was going to be my next question, was if you did, how do you go about that, and what's their exit? You're protecting yourself through these draws and not, making sure money isn't going out when work isn't finished and stuff like that. But I'm assuming you would not want to go down to Florida and finish a job or something like that, right? So you'd want to take the property back and then exit it through the market, or what's kind of your plan when that happens?
Well, it would depend on the property, but I've got to be honest with you. I have so much construction experience, and
Yeah.
as the owner, I didn't go out to jobs after the first couple of years, and I was managing from my desk. I did
Mm.
paper. Now, did I go to jobs? Sure, but did I do it frequently? No. So what I'm doing is I'm looking at the piece of paper. So if it's a single family, I don't think it's going to be that hard. I'm simply going to call the local building department and I'm going to find out who approves the building permits for remodels.
Mm.
And I'm going to get on the phone with him or her, make nice, kiss the ring, and find out who the good contractors are.
Mm.
And I'm
What a
going to hire
gem. Yeah.
somebody to go in and take care of it.
Yeah, that is such a golden nugget right there, to find somebody. And as soon as I said it too, I had I forgot about your construction experience. So as soon as I said it, I thought, you know what, he probably would be able to come in and finish that job if you wanted to operate that way. And what a gem calling calling that person and getting that referral and all, because that's where people tend to struggle, right? It is on the construction side, and I think a lot of people get into private lending hoping they never have to touch that piece of the business. But and you could probably operate where you never do, and exit the property through other means. But to your point, it's for you, it's a tool in the tool belt. You could do it if you needed to.
Sure. And for your audience, you can also call Home Depot,
Mhm.
ask the pro desk,
Yeah.
and those guys or gals will generally tell you who the good contractors are. Again, you got to play nice, kiss the ring,
Yeah.
but they'll tell you who the good contractors are. They know who's coming and going and who shows up at 7 in the morning and not
Yeah.
at 10 o'clock.
Yeah.
So yeah, contractors are a little easier to find than people believe.
Mhm.
You just got to look in the right spots.
Yeah.
So, and you can also, and I always say this to people, ask the guy who follows the guy and they'll give you the right guy. And what I mean by that is, if you want to know who a good framer is, ask a drywaller because
Mm.
they have to cover up the mistakes of the framer. You want to know who a
Yeah.
good drywaller is, ask a painter
Yeah.
because the painter has to cover up the mistakes of the
Sure.
drywaller.
Yeah.
So if you speak with the guy that follows the guy, they'll give you the right guy.
Yeah. Yeah. I love
Um,
that.
and it works very well. As
I
far as
wasn't.
most-
Yeah. No, go
Go
for it.
ahead.
I was just gonna say I wasn't expecting such construction gems on a private lending episode here, so it's really good info here.
Well, I'll give you another one and stop me when you want me to stop riffing
And
because
no,
I
please
speak to other
keep
private
going, yeah.
lenders. Um, People will say, well, I spoke with this guy. It's my first loan and I haven't done this before. And he wants or she wants 25% down so that they can pay the contractor.
Mm.
No, I was a contractor. All we did, we took the deductible from their insurance policy. And the reason for that is when you're done with an insurance job, it's amazing that they will find errors that equal the dollar amount of what their deductible was so they don't have to pay it.
Uh,
So in order to take that out from them, we just collected it up front. We wouldn't start the work without it because they were going to have to pay it anyway. So as far as them needing money down, no, they don't, because any contractor is going to have lines of credit with their suppliers.
Yeah.
With Home Depot, we actually had 45-day payment terms.
mhm, mhm.
So when they pay their guys, they're not going to pay the guy doesn't hand in most cases a timesheet on Friday and get paid that Friday for that work. You just can't process it that fast. So what they will do is they will pay them every other week, if you will. So everything's a week in arrears, and then you get your final paycheck. Will be in arrears as well. So because of that, I've asked, because they've asked me that question, borrowers, and said, okay, well, knowing this about contractors, that they have lines of credit and that they don't pay their guy the day the work is done, why do they need money to start? They don't need any money to start. They just need to go out and get the permits. The permits are a couple $100 or $1,000 or whatever they happen to be for a single family.
Yeah.
If they can't front that, you have the wrong contract.
Sure.
So what you do is you explain this to the house flipper, the investor that you're lending to, and every single time they backed off when I brought that logic up to them.
Sure.
Or I've never had anybody push it and say, well, I'm not going to borrow from you unless you give me 25% of repairs. Okay.
Oh, sure. Yeah. Yeah.
Exactly. And then just to kind of switch gears, when it comes to multifamily, if I had an issue, again, I know a lot of people in the industry. I would get on the phone with somebody in that market or one of my multifamily guys in another market and say, hey, this is what I have going on. Are you interested in picking up this property?
Yeah. Yeah.
And if it were if it one that I wanted to tackle, and I generally don't want to tackle it because I have PTSD from construction. And I don't mean to offend veterans. I'll say that jokingly.
Yeah.
But I would just, if I want to tackle, I'd go tackle it, because I do predominantly single family homes? Sure. But if I have to do 30 bathrooms, it's 30 single family home bathrooms.
Yeah.
You just break it down into pieces. This isn't rocket science.
Yeah.
It's not that hard. You just got to, you eat an elephant one bite at a time.
Yeah.
And I would just time out. Okay, I've got to get my electrician in. Okay, he's going to rewire the whole place. Okay, this is how long it would take for 30 single family homes. He's already on site. He's going to save his setup time. So this is about how long it should take him. And then I'd get on the phone with the contractor and see if we were on the same page and how long it should take. But so to answer the question, if I were so inclined, if it was going to be a great deal, I would jump in and manage it myself. And if I needed to, fly into town. And if I wasn't going to, I'd find somebody in the area that I knew that I could offload the property quickly.
Wow. That's amazing. It's some great golden nuggets here. To kind of change the questioning line a little bit. Did you always think you were going to be an entrepreneur there? It sounds like, I think you said you mentioned the first company, you were 23 years old. Did you ever see yourself back in those days ending up where you are today on the private lending side? Or, I mean, do you look back and think, wow, this is what a cool way to land here, or, and then I'm curious on the back end, you've done 3 different businesses now. Is there anything else cooking in the background, or do you feel like this is what you want to continue to do? Or, I mean, what's that look like? You're a passionate guy, and you got, when you seem like somebody, when you do something, you put your everything into it.
Well, I appreciate the kind words. Yeah, I always knew I would be a business owner because I have family members that were business owners.
Okay.
And I also have a character flaw, F-L-O-R, F-L-A-W, character flaw, where my brain and my mouth don't always work together. So that's not conducive to being a W-2 employee.
Nobody had to work for somebody else.
Yeah. So when I got out of college, I worked for 2 years, and I was an economics major in school. But the first job that came up was working at a residential treatment facility for sexual and physically abused kids. And I worked there as a residential counselor for a couple of years.
Wow.
And I kind of had some thoughts about human services, because you go in thinking it's all going to be unicorns and rainbows.
Sure.
And you find out that people are people, regardless of what job they do.
Yeah.
And then you have to deal with a government that underfunds because these kids can't vote. And in most cases, their parents don't vote either. So you see how it's underfunded. And I got burned out from that. I worked in a psychiatric hospital for years, a mental health worker.
Wow.
Thinking that would be the next thing, but it's the same thing, different day. And then I ran a group home for mentally developmentally disabled adults.
Wow.
But I always knew I wanted to do a business. And my first business partner happened to get a postcard in the mail for somebody selling medical alert system franchises. They ended up getting spanked by the FTC because they weren't really franchises. They were just presenting them that way. And then when they got shut down, we had already started going. So we found a supplier and a monitoring company. Actually, we had two monitoring companies so that we had a backup. And we ran with that. So I always knew that I was going to run my own business because, again, the brain and the mouth don't always work in concert for me. So again, that's not conducive to being a W-2 employee. So is this going to be the last one? What else do I have? Well, we've talked about looking at, my partner and I have talked about looking at some flex space and take it, you get a 15,000 square foot building, break it down to 1,500 square foot chunks and lend it out, lease it out to Chuck with the truck on triple net. You don't have to do anything.
Yeah.
For me, buying houses and having to deal with tenants, toilets, and termites, I want nothing to do with that, especially on the consumer side. I never want to have a front-facing business again. I think consumers are nuts. And even if they're wrong, they will go to Google and trash you because they want to get even with you rather than admit they're wrong, or they'll send a letter to the Attorney General to try and put pressure on you or the Better Business Bureau, and it's a total waste of time.
Wow. Yeah.
So that's one of the things that we're looking at. I've also lent on some multifamily because I needed some depreciation. So I bought depreciation. So that was kind of cool because I don't want to pay taxes if I don't have to.
Yeah.
As far as if I'm going to stop, I'm not stopping. When I sold my first business at 33, I took 5 years off. Once I sold it, because we sold to a public company, I thought I was done. Well, and this is something that I run into with people all the time. They'll say, well, why don't you retire? Well, how much Netflix can you watch? How much can you golf?
Exactly.
You've got to do something.
Yeah.
And I happen to be speaking with a guy through Facebook the other day, and we're due to talk this week as opposed to just DM. And he wants to know, because we're about the same age, as a couple years older, why I keep going and doing all this stuff. And it's very simple. You have to keep going. What are you going to do? I mean, I travel and understand I've got it set up. And there are times where I'm working where I'd rather be out playing, but I've got it set up so that I can play. So we like to travel. And I've been to all 50 states. I've been to 43 countries and 4 continents. Our goal is to do 100 countries in all 7 continents. And we got thrown off a little bit because of COVID. And now we're making up for it. So last year we went to 8 countries. This year we're going to do 10 countries. So I'll be up to 51 countries. We've done 2 so far. So I did the 51 countries by the end of the year.
God.
So I've got it so that I can take time off. I also live where I live. I live in the Rockies. I'm an avid whitewater kayaker. I'm on class 4. If you don't know, there are 5 different classes. I'm class 4, 5 is the highest.
Okay.
I'm a good, well, I haven't died yet. I'm a good enough not to die class 4 boater. I don't want to say I'm good because I'm not. I'm a hack. But I've been whitewater kayaking since 1996.
Wow.
So this is going to be my 29th season.
Okay.
And I'm 45 minutes from the river. I have every intention of boating a minimum of 50 times this year.
Wow.
So I have set it up so that, yes, I'm working. Yes, I'm doing the business stuff. And some days it's a grind. Like I said, that guy in Florida, I've got to grind with him and stuff happens. It is what it is. But I don't want to stop. I have no desire to ever sit back and watch Netflix.
Yeah. Yeah.
Because if you look at the data, there's a couple things that I know that I became very conscious of when I turned 50. And I don't want to go too far down this path because that's not what this podcast is about.
No, this is great. Keep going.
The blue zones, if you're not familiar, in the world live longer and they live healthier.
Yes. Okay.
Those
Yeah,
are
my
generally-
partner talks a lot about this.
Yeah. They eat Mediterranean diets, which is your fish, fruit, vegetables, grains, nuts, legumins, etc., legumes, however you pronounce it. So I focus on a Mediterranean diet. And then if you look at people who live longer, they are actively engaged with their mind. So when I sold my first business, it probably took me a year once I started the construction company to get my brain back because you just don't have the stimulation that you do when you're at work and you have all these things coming at you. So in order to stay mentally on top of it and to live as long as I can, as healthy as I can, I'm going to keep going.
Yeah.
I'm not now, do I watch Netflix? Of course I'm going to watch a show on Netflix.
Sure.
But is that going to be what I'm going to do for 8 hours a day? And then I'm going to hang out with some guys, and have coffee every morning and smoke a cigarette? That's not me. I'm going to keep going.
Yeah.
I want things to be falling off when I get to the brewery gates.
Oh my God. Well, that's amazing. I mean, what a great way to, I think, put a bow on this episode. I mean, this has been an amazing conversation and just such an inspirational and balanced way to end, this episode, because the brand behind this is called Accredited Life, and it's about that looking at wealth holistically, and what's the point of making all the money in the world if you don't have your head on right, if you don't have the health in order, all that kind of stuff. So I resonate with everything you're saying there. I think it's such an amazing thing that you're doing and very inspirational. So you should write a book on that, or I think a lot of people would love to hear more of that content, because that's because what's the point of all this if you're not doing all those other things that you're doing? So
You got to live. That's why I have that in back of me. Clock's ticking.
yeah,
Because
I love that. Yeah,
ticking, time is cheap. It doesn't care what you do with it.
yeah,
But
Yeah,
do
you're not
something
getting
about
back.
it.
Yeah.
We're going in May to Iceland, and we're going to dive the Silfur Fissure, which is the only place on the planet where you can dive between two tectonic plates.
Wow.
So and then last one. Then in December, we're going down to Roatan. I met somebody at an event recently, and we're going to go whale shark diving in Roatan in December.
Wow.
And if you're not familiar with whale sharks, they can get up to 60, 70 feet long.
Oh my God.
Yeah,
That's
well,
amazing.
they are just plankton eaters. They don't like,
Okay.
they just move along and catch stuff.
Mhm.
oh.
They're big.
Oh, they're big.
Yeah,
My point
wow.
is, you got to live, you got to go, because when I'm on my deathbed, I'm not going to care what I have. I have a 2006 pickup truck.
Yeah.
But there's a method behind it. It's a crew cab, so I can fit 6 people in it, and I can fit 6 kayaks in the bed. And I know because I do it all the time. So my point is, I want the deathbed memories.
Yeah.
And that's why, I need the mental stimulation, but I want the memories too.
Yeah.
I try and make a balance.
I love it. Wow, Mike, this is very, very inspirational. Motivational, all those things. It's amazing. So, well, this has been a great conversation. I could talk to you all day. You got a great personality and just lots of stories and things like that. So, for the audience that want to hear more from you and get into your world, how can they do that, Mike?
They can look at our website, which is reicapitalguys.com. Again, that's reicapitalguys.com. And then my email address is mike@reicapitalguys.com. And I'm more than happy to get on the phone with them. I'll spend some time with them if I can help. I can't spend unlimited time because I'm focused on what I'm doing.
Yeah, you got a lot going on.
Yeah, I believe in what they say when you get on the plane. Put your mask and take care of yourself first before you take care of other people.
Yeah.
So I'm happy to give somebody a one-off help and a hand up. So if they want to contact me that way, I'm not giving you my phone number because they have to do it by email first, because if I don't recognize the number, I don't answer the phone.
Yeah. Oh, that's awesome. Well, we'll put the links and stuff in the show notes. And Mike, I can't thank you enough. This has been a great conversation. I really enjoyed you being here.
Peter, it's been a pleasure. Thanks for the invite. Have a great day.
Thank you.